So in the last video, we said something that sounded almost too simple to matter. In Forex, you never trade one currency on its own. You always trade a pair. Well, today we're going to open that idea up and look inside it. Because when you actually click buy on a pair, something is happening under the hood that most beginners completely misunderstand. And that misunderstanding quietly costs them money. By the end of this video, you'll know exactly what a currency pair is, what the two currencies in it are called, and what you're really doing the moment you place a trade. No jargon, no theory for the sake of it, just a clear mental picture that will change how you read every chart from now on. So stick with me, because this is the piece that makes everything else make sense. So, if this kind of content helps you, take a second to like the video, subscribe, and turn on notifications so the next lessons reach you the moment they go live. And feel free to share in the comments which topics you would like us to explore in future videos. And if you want to support the channel on a deeper level, consider becoming a member to unlock exclusive content and help keep these lessons coming. You'll also find links to our trusted partners in the description below. Using them costs you nothing, and it directly helps the channel keep producing free educational content like this. Let's start with the mistake, because naming it is the fastest way to fix it. When a beginner looks at Euro USD, they tend to see it as one single thing, like a stock, like a share of a company you either own or you don't. So they think, I'm buying Euro USD, and I hope it goes up. And honestly, I get why. It's sitting there on the screen as one line, one price, one chart. It looks like one object. But it isn't one object. It's a relationship. Euro USD isn't a thing you own. It's a comparison between two currencies. It's the euro measured against the dollar. And once that clicks, the whole market starts to look different. Because you stop asking, is this going up? And you start asking the real question, which one of these two is winning? So let's give the two sides their proper names, because you'll hear these words for the rest of your trading life. Every pair has a base currency and a quote currency. The base is the first currency you see, on the left. The quote is the second one, on the right. In Euro USD, the euro is the base and the dollar is the quote. Simple as that. First one's the base, second one's the quote. Now, here's the key that unlocks everything. The base currency is always worth one single unit. And the price you see on your chart is simply telling you how much of the quote currency it takes to buy that 1 unit of the base. That's the entire meaning of the number. The base is what you're measuring, and the quote is what you're measuring it in. Let me make that real. When you see Euro USD trading at 1.10, all that price is saying is this. 1 euro is worth $1.10 right now. The euro is the base, that's the 1. The dollar is the quote, that's what the 1 is priced in. So the number on the chart isn't random, it's an exchange rate, and it's answering one exact question. How many dollars for 1 euro? And this is where the real shift happens. So slow down with me here. When you buy a pair, you are doing two things at the very same time. You are buying the base currency and you are selling the quote currency, both at once. Buying Euro USD doesn't just mean buy euros. It means buy euros and sell dollars in a single move. There's no version of this where you only touch one currency. A trade always has 2 feet in the water. Think of it like a currency booth at the airport, the same one from the last video. To get euros in your hand, you have to give up dollars. You can't get one without letting go of the other. That's exactly what's happening in your trade. You're not just picking up one currency, you're always trading one for the other. Every position is a two-way street. So when you go long Euro USD, when you buy it, what you're really saying is, I think the euro is going to get stronger than the dollar. You're backing the base to beat the quote. If the euro rises against the dollar, that price climbs, and your trade is in profit. You bet on the first currency, and the first currency delivered. But here's the part that breaks people's brains at first. You can also do the exact opposite. You can sell the pair. You can go short. And when you short Euro USD, you're flipping the whole thing around. Now you're selling euros and buying dollars. You're saying, I think the dollar is going to beat the euro. If that price falls, you're in profit. Because in Forex, you can make money from a chart going down just as easily as one going up. And that's something the stock world doesn't teach you to think about. There's no such thing as sitting in cash and waiting on the sidelines inside a trade. The moment you're in a pair, you're holding a view on two currencies at once. Long one, short the other. You're never neutral. You're always saying one currency will outmuscle the other. So let's turn that into a simple rule you can read off any chart. When the price of a pair goes up, the base currency is getting stronger than the quote. When the price goes down, the quote currency is getting stronger than the base. Up means the first one's winning. Down means the second one's winning. That's it. That's how you read direction on every single pair. Let me put a number on it so it really lands. Say Euro USD moves from 1.10 up to 1.12. What just happened? It now takes more dollars, $1.12, to buy that same 1 euro. So the euro got stronger, the dollar got weaker, and if you were long, you made money. Same move flipped. If it dropped from 1.10 to 1.08, the dollar just got stronger, and the shorts got paid. And to prove this isn't just a Euro USD trick, let's do it with a different pair, because the exact same logic works everywhere. Take USD JPY, the dollar against the Japanese yen. Here, the dollar is the base, it's the 1, and the yen is the quote. So a price of 150 means $1 buys 150 yen. If that number climbs toward 155, the dollar is getting stronger than the yen. If it slides toward 145, the yen is winning. First currency, second currency. Same rule, every single pair on your screen. Now, you might be wondering, who decides which currency goes first? Why is it UR/USD and not USD/EUR? And that's a fair question. The answer is that these orders are set by long-standing market convention. The pairs have a fixed way they're quoted, and everybody uses the same one. You don't get to flip them around. We're going to get into which pairs exist and how they're grouped in the very next video, so just park that for now. But the reason the order matters is worth locking in today, because base and quote aren't interchangeable. The direction of the price always means the same thing for that specific pair. Euro USD going up always means the euro is beating the dollar. It never flips. Once you know which currency is the base and which is the quote, you always know exactly what a rising or falling price is telling you. Now, I want to be honest about the edge of what we're covering, because that's how we do things here. Knowing that a buy is long the base, short the quote, tells you what trade is. It does not tell you when to click that button, where to enter, where your stop goes, how to read the setup. That's the job of price action and structure, and it lives in our technical analysis course. Here, we're building the foundation, understanding the thing you're actually trading before you ever trade it. And that foundation is more powerful than it looks, because once you truly see a pair as two currencies fighting each other, a door opens. You stop staring at one chart in isolation. You start thinking, okay, is this the euro being strong or the dollar being weak? And those are two very different stories. That single shift in thinking is what separates someone guessing at a chart from someone actually reading the market. We'll build a whole tool around it later in the series. So let's answer the question we started with. What are you really buying when you trade a pair? You're never buying one currency by itself. You're buying the base and selling the quote at the very same time, betting that one of them gets stronger than the other. A pair isn't a thing. It's a tug of war between two currencies, and the price just tells you who's winning. In the next video, we're going to answer the natural follow-up. Which pairs actually exist, and which ones should a beginner even focus on? Because there are dozens of them out there, and I promise you, they are not all created equal. Some are calm and friendly to learn on, and some will chew up a beginner alive. So if this cleared things up for you, subscribe and keep following the series in order. We're building this brick by brick. I'll see you in the next one, trader. So, trader, if this video brought you more clarity, like it, subscribe, and turn on notifications so the next lessons reach you. And tell me in the comments what you want me to cover next. And if you want to go deeper, you can become a member of the ComLucro trader community right here on YouTube. It unlocks exclusive content, early access, and extra tools for your development, while directly supporting the channel. You'll also find our trusted partners linked in the description. Using those links costs you nothing and helps us keep producing this kind of educational content. And remember, the mission of the ComLucro channel is simple. We help traders build clarity, confidence, and structure, so every decision is made with discipline and intention. Here you'll find complete courses built as a true trading masterclass. Liquidity, market structure, higher time frame analysis, and supply and demand. Always focused on reading price and executing with a professional mindset. We also cover trading psychology, risk management, and long-term consistency. Because trading isn't just about charts. It's about mindset, discipline, and execution over time. Our main courses include smart money concepts, ICT, technical analysis, trading psychology, and Wyckoff. Alongside that, we share insights from respected traders whose work helps you understand how markets really behave. Thanks for watching, and I'll see you in the next video.